So starting up from the highs then, we had the big sell-off, came all the way down to the low down here at around 44,178. Extraordinary move. We managed to get two of our shorts from yesterday's live event, and both in the back. Good afternoon, ladies and gentlemen. Hope you're all doing excellently today. It is July 8th, and we are here today to get on with our Tactical Tuesday, which is our Fading the Noise session. Now, Mondays, obviously, we go through the market report. We get set up for the US Open. Today is going to be all about building out our order book in the FX, metals, energies, and then US indices markets, getting lots and lots of market exposure out there, and seeing what's occurring ultimately. It's our process every single week. So today we're going to start from the bottom of the FX list. We're going to be working our way up and through the FX assets that are part of our portfolio. We're going to move into metals, energies, and then close off the session this afternoon with US indices ready for the US Open at 2:30 GMT. Before we do that, however, we are going to do a slight recap on yesterday's trading performance in the US indices, which actually ended up being incredibly good. Really pleased with yesterday's afternoon session in the US markets. Couldn't have asked for anything more. The sell-off was really significant. Naturally, I was talking yesterday morning about tariff news and how everybody should be certainly paying attention to what's going on with the tariffs. This week, President Trump is already has done, but is announcing more and more tariff news, and when those tariffs will be going live as well. There has been a pause on the tariffs going live, but they will be going live in August. So huge news for trade. Obviously, we have to think about the economic fallout from something like this as well when it comes to the tariff data, because the tariffs are going to increase inflation. It's going to increase inflation. A lot of these countries at the moment are really struggling with it, including ourselves here in the UK. So it's going to be chaos. Frankly, it's going to be chaos. But look, I think if we look at the evidence and we think about what's happened so far, we have a president that says one thing and does another, and U-turns left, right, and centre constantly. So we have to take all those things into consideration as well. Right, so starting up from the highs then, we had the big sell-off, came all the way down to the low down here at around 44,178. Extraordinary move. We managed to get two of our shorts from yesterday's live event, and both in the bag in here. So one was really nice. Second was really nice. We did get the bounce from the ascending level, as I indicated we probably would. So that was pretty decent, but it didn't actually hold price at all. Price snapped straight through it and ran all the way back down to 44.17, 44.18, whatever. So really big move there in the USD Dow Jones. Very pleased with our trading performance. That first trade was a 1 to 2.8. The second one was a 1 to 2.2. Net result for the day just on those two alone was 1% there. So that's really nice. In the NAS 100, things didn't go exactly to plan yesterday. Things didn't go exactly to plan yesterday. So if we go back here we can see that the indicated pathway, which is what I believed would happen with the NAS 100, was long. And that's predominantly because we were trading on top of a big sort of relatively strong level of daily liquidity. Now, the price action did survive here for quite some time. We were coming down. We were rejecting it over and over again. But it was big tariff news, big news on trade. It's going to sell off, right? The fundamentals control the markets. Technicals are there to assist. So in this particular instance, we did have the continuous attempt at whatever, bullish liquidity was down there, trying to support the longs until eventually it just gave way and it got crushed. But we did take a long in the NAS 100. That one was there upon the breaker structure. We came up, survived in profit for a little while. We actually double topped out at this area here, and that was around 22,803, leading us back down to an instant stop loss afterwards at the 22,742 level. But it doesn't end there, because we actually traded the S&P as well. And the S&P yesterday yielded this little nugget in here, which was the short. Now, yesterday afternoon, we had a lot of chop going on at 2:30 in here. We had that ascending level. It was all looking a bit crazy. And because of the nature of the candles and the size they were, every single candle we were looking at, the margins weren't there to trade. So all of this up here is just noise. So if we clear all of that down, this was our short opportunity, which was a beautiful breaker structure. Really nice tight spreads as well at that point in time, considering it's 10 to 4 in the afternoon. And good couple of hours after the NFP. Good couple of hours after the US Open there. And we ended up bagging ourselves a 1 to 2.63 as well on that one. So 4 trades, 3 winners, 1 loser. Really strong performance from our US markets yesterday. Very, very pleased indeed. So that's those. Now, this morning, it is worth calling out a loss. I did take a loss in the DAX this morning based on the opportunities that were provided to everybody. So I've already cleared down the chart now, haven't I? Yes, I've already cleared down the chart. I was looking at the long on here. So I took my trade in here, in this level. Looking for that area there as a breaker structure point. Got in on the trade. It came down once, very close to the stop loss, came up again, and then took me out there at around 8:30. So that was that, unfortunately, for the DAX, and I haven't touched the European session since. It did actually end up being all right. We did get the beautiful break close and retest above this point of liquidity up here. We got this really nice point of positive imbalance of price. Beautiful breaker structure in there as well. I just didn't take the trade. It's 11. And at around that time, it's usually not advisable to get stuck in, because a lot of the Europeans are going to be going away for break time. They're going to be stepping away from their desks, and then we get the second wave. They'll get the second wind. So this is usually, where break time is. And then we get the second wind, and that's usually from around 12 when they come back from break. And then they short all the way down. In this particular instance, they shorted, and it's a really nice run, and that's gone back down to our US sort of markets time at around 1:30 to 2:30. So be interesting to see where that one ends up, but obviously not going to be trading it again this afternoon. Right, so what we're going to do now, focus on our US markets, FX markets. We're going to work our way up through the list into metals, energies, and then closing out with the US indices. So USD JPY, let's see what's on offer here at the moment. Start on the daily to get a bit of context, as we usually do, like following our process of top down. So we have a nice point of inflection there. Okay, really nice big price action pullback, breakthrough, range. I would say the predominant range high, the established range high, is actually more likely to be 148.23. And we've broken through this level a number of times here, so possibly looking for the trading margin between the 2 points there. So we get the breakout of this level, and we actually look at taking the trade up to that one, because that's a decent margin there, isn't it? Let's have a look at the 15-minute time frame. See, that's the trading margin available. What's the DXY saying at the moment? Let's have a look on the daily. DXY is having a bit of a pump at the moment. Still inside liquidity. It's got a long way to go before I consider this bullish. We also are actually only at this time just retesting this point of inflection here. It's a little bit of a telltale sign of a bearish continuation from this point on, isn't it? Makes me wonder about that USD yen. It's got a really nice big margin to go up to 147.90 or 85. But I'm not a huge fan of it. I think if we think about the points of liquidity just going back in time here at the moment, that one in there is actually really nice. That's a superb point. Rebound, retest, rebound, retest, and then a really nice big inflection point there as well. Look at the sizable move that we had when achieving that level there, and that was 25th June. So if we just drag that one across to the right hand side, we can build ourselves a trading margin between these 2 points in time. And I don't think this is too bad. So if we say, look at the breaker structure underneath that level, which means we're going to get a nice big stop loss up there. Entry just below there, targeting 146, 027-ish, 030-ish. And then we're going to have the stop loss about there, I would say. A really nice margin above that zone. That's going to yield us a 1 to 2.43. Net return, 0.57. So not too bad at all on that USD yen. Looks really, really nice. That's going to be a pending order short. Right, USD Swiss. No, USD CAD. Let's go up to the daily here for a moment. No. What have we got in here? We've got that level there. We've got the double. It's not a double bottom really. It's not what I would deem to be a good enough one. We got that one up there as well. The short could certainly have legs. The long looks a little bit flaky. Let's go back down to the 15 here. I must say that that is a wonderful breaker structure point in there. Very, very nice indeed. So what we're going to do, pull that across. That's the access point for our trade. USD CAD short down to here. Stop loss is going to be stuck at around the 50% point of that liquidity zone, yielding a 1 to 2.35. Net return 0.56, 0.55. So again, really nice opportunity in there. We also have a split opportunity on this one. That's the high, most recently used. Where the price line is right now is what I would be using as the breaker structure element for the long. I mean, I get zero. There's 0 pip spreads on this one, so I don't really care for taking a small trade. That's fine. About taking a small trade, shall I say? So that's not a problem. Wondering if we could get in for a little 45-minute trade idea up to 136.80. It could be done in 15 minutes, frankly, if it gets pushing. So possibly a little trade up there as well for a 1 to 2.1, 1 to 2.2-ish. So we do have the bigger short and we have the little long, but they both respectively look good. Yeah. Yeah, I don't think there's anything. Yeah, I don't think that looks bad at all. Yeah, I don't think that looks bad at all. So I'm going to take that one. And that one's going to be a blue for split bias. And I need to take a picture of that one as well. Right, NZD USD. Let's get going here. Daily time frame. No, not on the daily. So what I'm doing here, why I'm so silent at the moment, I was trying to work out what the state structure of the market is. It's always important to get a good idea of the state structure of the market, whatever asset you're trading, because it provides the context in which you're going to be ultimately taking the trades. So for me at the moment, I'm trying to work out, okay, is this a trending market or is it a ranging market? It's kind of, for me, more trending, but it is very volatile in trending. We have these significant periods of consolidation and stagnation followed up by these big sharp moves thereafter, which can be incredibly difficult to get a line on and to find those access points to an opportunity. So if I see something that doesn't make me instantly feel comfortable and that I feel like I've got an edge in it, I'm going to move on, because there's just frankly no point me spending my money in an area that's not going to, not going to yield a decent return. So I'm going to scrap the NZD USD. Moving on, NZD JPY. I mean, frankly, this looks very similar, excluding the volatile elements. So it looks just really, really stagnant at the moment. We've got a trending bit of price action in here, but it's one day long, one day short, and it's just a repeat of that over and over again. Not really seeing the money making opportunities in this asset at the moment, so we're going to skip that one. NZD Swiss looks a lot different, doesn't it? So we've actually had this really nice big risk shift, which was where the sell-off. We've had the recovery. We had a really nice, quite a nice established range in there for a while. We've got negative imbalance of price, which has just been confirmed. And although the recent move has been tired looking, it's not really shot off with a good degree of momentum. It's still been quite consistent, and we're still making nice lower lows and lower highs all the way down here. So there might be an opportunity. It definitely doesn't look perfect, but there could be the opportunity for some trading to take place in around here. So let's have a look at this. Okay, so very, very wide margin on the 15-minute time frame for an intraday trade. We've got this level in here, which is what price action's currently trapped between at the moment. We could look at the short, couldn't we? I don't like any of this price action. That doesn't look very nice at all. Inconsistent. I'm just wondering if we get in aggressively enough, we can avoid some of these highs. Let's have a look at this. Let's build the trade out first of all. So we're going to be targeting around 47.77. I mean, a stop loss at a 1 to 2.25 is going to be ironing out all of these. And it's just going to leave us with, it's just going to leave us with the extreme points up there. Well, after the market's come down here, it's come down and that's a loss. It's come down and that's a loss. So we haven't got a decent track record of success using that as the breaker structure point. Frankly, it's had zero success. After hitting liquidity, the market's never actually come back to 47.77. Never. So I think that's reason enough to avoid. So I'm going to move on from there as well. NZD CAD, that looks like a murder scene. Possible move back down to previous lows. I don't think that's the previous low I'd be going for. The established previous low is this one. And this is important to be able to iron out things like this as well, guys. This will take you some, take you a few years, I imagine. But after you've been around the block a few times, you pick up on these little things. So you see this area, and then we see this area, right? Well, this is a fake out, okay? So we have the market that comes along here. The liquidity is in there because this is where the market's been rejecting over and over and over and over again, apart from this one particular point. And the market doesn't reject the low there. It actually fires the way through. But it's not just the fact that this is just a bit of price action that's just poked its nose through, stopped a bunch of retail traders out. It's actually what's happened as a result down here. So the market's come all the way down there in this one candle, and then in an instant has knee-jerk reaction straight the way back up again, followed by two very hefty candlesticks, which is then furthermore led the market back into the original trading state. When you have a good understanding of that and a good grasp on that, you know that this is the commercial point and you don't really want to be wasting your time down there. There is also the opportunity that this may happen again. So I think what we would be ideally looking for in this NZD CAD, if we had a gun to our head and we had to trade it, You're looking at that being the break, close, and retest. You're looking at this being the breaker structure point, and you're looking at the level below being the target profit, so you can be in and out of this market as quickly as possible. Now with a 50% stop loss, you're looking at a 1 to 2.5, which is not bad at all. NZD, something like the NZD CAD, 15-minute time frame, your spreads are going to be negligible versus the trade and the risk reward that you're being yielded for in that one. It makes financial sense. So I'm going to take that one as well. I like that. NZD CAD short. Good afternoon, Corey Tim. Good to see you, mate. So that's 3 down. So next up, cable. Let's have a look. What's cable up to at the moment? Coiling around liquidity. Price line currently trading on top of inflection point. Oh, excuse me. Yeah, so that's a big area, isn't it? It's a big area at the moment in price. Failed. Well, on the contrary, that level in there is the next major level down, isn't it? And if I'm not mistaken, that's actually quite a decent level. If we use that as the breaker structure point, oh, we're going to be firing off a few trades this week, I've got a feeling. Right, so entry is going to be a 135.55, followed by a TP at 135.21, and the stop loss is going to be at 135.704, yielding a return at a 1 to 2.16 ratio. You're probably going to be netting 0.5%, maybe 0.51% out of the back of that one. So that's not too bad. But I am gonna consider an opportunity. No, I'm not. Actually, no, I'm not. No. Yeah, no, the margin's not there for that one. Okay, so cable is just going to be a short, which is nice. It is nice because we have a dollar short. We have $2 shorts of the USD CAD. Now we've got $2, 2 long dollars as well with. Sorry, no, we're yeah, we do, yeah. We got $2 longs as well with the introduction of cables. So that, from a risk perspective, is quite nice to have actually those trading assets so far in the portfolio. So that's good. Right, let's skip out the rest of the pound pairs for now. Let's work up into the euros. So Euro USD, very, very range bound at the moment on this one. Strong trending market, of course. We already know that. Price retest attempted liquidity, but I wouldn't say that that's achieved it. Don't know. Well, possibly. Yeah, possibly. Yeah. Right, let's have a look at this. So we've got the highs there, don't we? With that one cheeky little low there. And that's actually rejected that level, so it's probably even wider than I'm giving it credit for. So maybe there. That's what I'll be looking at. And then this becomes our trading margin for the current week. Let's have a look at the 15-minute time frame. It's very, very wide trading margin. Way too wide. But price action has given us an opportunity. Not only do we have a previous point of inflection there, we also have, if I'm not mistaken, an aggressive and very, very nice, well-balanced breaker structure point to get in on that trade. Actually, no. That is a very aggressive one, and I do like it, but I'm wondering if we should swap it out for this. Now, the market's already had a stab at this one, and it came down, but I'm thinking the second attempt's going to be slightly different. Now, of course, team, if we have the entry for the trade on the Euro USD above the second zone up, this one here, it does mean that our stop loss is going to have to be inside the trading margin, as opposed to executing the long here with our stop loss down at 117.067, which is inside the liquidity point. That's the problem. That's what we have to consider here. Now, honestly, if the market's going to trade down there, it's going to trade down there, and there's nothing we can do about that. Just going back in time, I do like this level. This one, it looks really good in recent history. Yeah, it's not bad, is it? It's not bad. They're both not bad in their own right. Difficult one, team. Difficult one on this Euro USD. The trading opportunity is certainly worth it. It's certainly worth taking. Good margins. We've seen evidence of it being supported as well in previous plays. So it makes sense. But I am a little bit stumped on which one to take. I think having my stop loss lower, that's really worked for us. This is a strategy that we've actually employed recently with a lot of our trading, where we're going for, in the high risk geopolitical and macro theme, we've been going for the more aggressive approach, because it actually allows us to have a wider stop loss, and that stop loss being lower down or higher up and above the main points of interest here. So I think it's worth doing, and we've come out with some pretty decent returns over the course of the last month, I would say. So I'm going to have the target profit for the Euro USD 117.62. The stop loss for this one is going to be situated there at 117.11. This is yielding a 1 to 2.23. And it also beats the current low of the market, which is situated there, and the breaker structure low, which is situated there. So we should have some pretty decent defense in the market as long as the trade triggers nicely. Right, so let's get that one done. And that's going to be green. No shorts available in the Euro USD at this time. Right, guys, we're actually at 2 o'clock already. So I might have to break that down like I do sometimes. With the FX basket, we'll do, obviously we've done the first half today. We'll look at incorporating the second half tomorrow, hopefully after a couple of these trade ideas have been triggered and are done and in the back pocket. Now let's move on to metal markets. So metals at the moment, gold it's looking okay. I think this is quite nice. The current level of price action is incredibly messy. It's all kind of all over the place here, but we might have the trading margin and availability for the shorts. Yeah, that we're looking for, which is possibly there. So if that's the breaker structure point for the short, it's quite aggressive. We've got a TRF, which is at the point there, at the beginning of the price action pullbacks, where liquidity will be. But again, we're already going to be halfway through the trade by that time, so I'm hoping that it's going to be negligible in terms of what happens after. I'm going to have that trade idea in there, actually, guys. I'm going to take that. That's a 1 to 2.32 with the stop loss above these retest highs, filling the void of what we've already seen previously in recent history. So that makes perfect sense. I actually really like that. So yeah, short gold. I'm just wondering if there's an opportunity to get something on the other side as well. So thinking about up here, okay, we know that there's big points of inflection here. We know that commercial players are interested in this point. Lots of money in the market. So I think we can look at a trading opportunity via breaker structure on the opposite side of that level as well. So I'd be saying entry going to be there. Yeah, that's fine. Yeah, that's fine. That's fine. So that's what I'm going to be looking at today for the long. So gold to trade up to 33.42 with the stop loss about there, say bang on the 50% point of that zone there, around about. So yeah, looking at around a 1 to 2.87, possibly even a 1 to 3 on that long opportunity in gold. So that's looking quite nice as well. So we can take that one. That one's going to be switched out to a blue. Energy markets. Let's have a look at the daily quickly. Did get that rejection yesterday, but the market is coming back down again. Yeah, that's not bad, actually. Before taking this one, though, team, please do check your spreads. Natural gas can be incredibly expensive to trade for some people, as far as I'm aware. So please do your due diligence. Make sure that the trade is actually worth, worth your time, worth your money. But I think, looking at the breaker structure down here, to take the trading opportunity back down to around there, I think that makes perfect sense. I mean, honestly, the trading opportunity on the other bloody side of this one looks really good as well. If we have... Oh, come on, man. So if we have this level in here as the long breaker structure, obviously we have the TPs. That's not a surprise up at the double top. We can have a long opportunity in the market around there. And that's going to yield a 1 to 3. And we can also have the short opportunity on the other side of the market down at the lows there. And that's going to look like that. 1 to 2.6. So a couple of really nice healthy trading ideas. Download. Natural gas. Done. Split opportunity. Right. And then we get on to our US indices. So, US indices today. Huge sell-off yesterday. We haven't really had too much of a correction yet. The S&P 500 and the NAS 100 definitely have outweighed the US 30 Dow Jones, but the move was far more... Oh, excuse me. Far more significant. I don't know what's going on. I didn't necessarily have a bad night's sleep. I feel knackered all of a sudden. It's coming over me. We've got this point down here, don't we? Take the... Ah, yes. Actually, I've just noticed something. Look at this structure in here. Drag a zone across to the right-hand side, and that is exactly where yesterday's tariff sell-off ended up, followed by another huge commercial buy-in. So there is money in the market, guaranteed, down at 44.17. So what we need to do then is look at the breaker structure for the short, which is going to be situated about there. We know that there's a TRF in the market which is situated about there. So you could, in essence, take one 1 minute trade here and one 1 minute trade there. Just the same way we did yesterday. So you don't exactly know where your entry is going to be and your stop loss and stuff, but I'll give you guys a very, very sort of rough idea. And so 1 to 2.46 and a slightly bigger one in there as well. So that's 1 to 2.68. And so something just like that. If the market breaks out long today, yeah, the breaker structure is not ideal. Yeah, this Dow Jones looks so good. I'm wondering if there's not much point even considering the others in their current setup. So you do have that area there to contend with. So that's going to be the TRF, right? That is going to be the TRF without a shadow of a doubt. But if you do get in for a long, I would be targeting that 44, 46 level. Now, you don't have to do exactly as I say, of course. Your trading accounts, your trading accounts are yours. Good afternoon, James. Good to see you. You're getting old now. Well, for the tiredness? Yes, I know. Yep, I am indeed. So, yeah, I think I would be going up for that top level up there, 44, 46. That's the one. Yeah, that is the one. So that's going to look like that for 1 to 2.72. That US 30 Dow Jones is looking great. So I'll take a picture of that one. Let's go down to the NAS 100, the S&P quick. I mean, these are not looking great. These are looking really disorganized. Very, very messy. Not confidence inspiring. Yeah, definitely not confidence inspiring. Because that's the same trade I'd be taking as yesterday. We're exactly the same place as we were yesterday. At the US Open, the S&Ps. No. No, I know this is very unordinary. But I'm not going to I'm not going to be focusing my attention on the NAS or the S&P today. I'm actually going to just simply focus my trading attention on the US 30 Dow Jones today. It's going to be my only trading asset for the afternoon. Certainly plot out some more levels as well. There's that one in there. If the market breaks through here, we go up to 44.51. I mean, that would be a pretty decent day if we see that. Price action is trading there. It's going to be a 0.17% increase to the previous high. It's going to be a 0.3% increase to that high. And there, we're currently at 0.16%. So we've got a lot of room to breathe. You possibly could even take the market, can't believe I'm going to say this, but back to 44.61, 66, sorry, 44.66, up at the highs there. You're looking for this level? That's what you're looking for. That's eventually where we'll end up, guarantee you. Maybe it'll be today, could be, and then you're looking taking the big long back up to that level in there. Now these are just templates, guys, templates to use. This is sort of the kind of execution levels and the rough approximate areas for the stop losses that I'll be using myself. You guys can use variation of that. You can use it exactly. It's impossible to tell where where you're going to get your fill, but it will be around those levels if you quick on the trigger finger. So that'll be that. Right, team. So that is it from me. We are currently at 7 minutes past 2, which means you have 23 minutes to go before your US Open this afternoon. Remember, we do have a lot of housekeeping to do now as well. We have opportunities in the USD Yen, USD CAD, NZD CAD, cable, Euro Dollar, gold, and natural gas. So there's a lot to get on with. There's certainly a lot of work to get on with. So make sure you get all the numbers in and punch your trades in when you can, and good luck this afternoon in the US Open. If you need me for anything at all, please don't hesitate, reach out ASAP and I'll get back to you in good time, and good luck in the trading session. Alright, so take care guys, have a good one, and I'll see you then. Cheers team, catch you later, bye bye.